Based on the provided data for Bitcoin, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a consistent upward trend, suggesting a bullish sentiment surrounding Bitcoin. Although there are short-term fluctuations, the overall trajectory points towards continued growth. Forecast price also supports this long-term bullish outlook, indicating a gradual increase over the next week. Therefore, the investment strategy involves entering a long position at the current market price, which is around $67,300. A stop-loss order should be placed at $63,606. The support price, to minimize potential losses. Target price is set at $69,032. The resistance price, aiming to capitalize on the anticipated price appreciation. This strategy capitalizes on the long-term bullish trend and allows for potential profit from Bitcoin's continued growth. Based on the provided data for Ethereum, a medium-term investment strategy appears most suitable. The historical price data reveals a general upward trend, with recent fluctuations indicating potential consolidation before further growth. The forecast price suggests a slight dip followed by stabilization around $2,570, aligning with the support price of $2,440.89. This suggests a potential buying opportunity near the support level. Therefore, I recommend a long position on Ethereum for a medium-term investment horizon. The entry price should be around $2,440.89, the support level, with a stop loss placed at $2,380, a price point below recent lows. Target price can be set at $2,694.43. The resistance level, aiming to capture potential upside as Ethereum resumes its upward trajectory. This strategy balances risk and reward, capitalizing on the expected price appreciation, while mitigating potential losses through a well-defined stop-loss. Based on the provided information for Ripple, the 2-week price change shows a fluctuating pattern with no clear upward or downward trend. The 1-week forecast, however, suggests a decline in price over the coming days. This indicates a potential short-term bearish outlook for Ripple, considering the forecast and the price history. A short-term investment strategy focusing on a short position appears to be the most suitable approach. An entry price around $0.535, slightly above the current price, allows for a small margin of safety while still capturing potential downward movement. A stop loss should be placed at $0.548, slightly above the recent resistance level, to limit potential losses. The target price could be set at $0.525, aligning with the predicted price decline and providing a reasonable profit target. This strategy aims to capitalize on the anticipated short-term price dip in Ripple while managing risk effectively. Solana shows a consistent upward trend in its historical price data, with a recent surge above $160. The forecast predicts continued growth, reaching $176 within the next week. This positive momentum, coupled with the price being close to the support level of $157.28 and below the resistance level of $171.71, suggests a favorable environment for a long position. Therefore, an aggressive investment strategy for Solana would involve entering a long position at the current market price, which is slightly below the support level. The stop-loss order should be placed at $157.28, the support level, to minimize potential losses. Target price should be set at $171.71, the resistance level, aiming to capitalize on the anticipated price surge. This strategy capitalizes on the positive price trend and forecast, aiming for a healthy return within a short to medium time frame. Based on the provided Cardano price data, a cautious medium-term investment strategy appears most suitable. The historical prices demonstrate a slight upward trend, but the recent price action suggests consolidation. The forecast indicates a continuation of this consolidation, with prices potentially moving sideways or slightly upwards in the coming week. Considering the support price at $0.3152 and the resistance at $0.358, it seems prudent to avoid aggressive long or short positions. Therefore, a medium-term strategy with a long position is recommended. An entry price around $0.345 would allow you to capitalize on a potential upward move, while staying below the resistance level. The stop loss should be set at $0.335 to limit potential losses if the price drops below the recent lows. The target price could be set at $0.36, aiming for a modest gain as the price approaches the resistance. This strategy allows for potential profits while managing risk within a reasonable time frame. Given the price trends and forecasts for SU coin, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a slight downward trend recently, but the forecast indicates a potential for a slight upward movement in the coming week. This suggests a period of consolidation before a potential breakout in either direction. The support price at $1.9435 provides a safety net for potential downside, while the resistance at $2.1298 indicates the ceiling for potential upside. Therefore, a long position is advisable for a medium-term investment strategy. A suitable entry price would be around $2.05, allowing you to buy in near the current price and potentially benefit from the upward movement predicted by the forecast. A stop loss should be set at $1.95 to limit potential losses if the price drops below the support level. Target price could be set at $2.12, aiming to capture a significant portion of the potential upside movement before reaching the resistance level. This strategy allows for a balance between risk and reward, capitalizing on the potential for growth while minimizing potential losses. Given the historical price data for Filecoin, the 2-week price change shows an upward trend with a recent consolidation phase. The forecast indicates a slight upward movement over the next week, suggesting continued bullish momentum, while the support price at $3.567 provides a safety net. The resistance level at $3.726 presents a potential ceiling for near-term gains. Considering these factors, a long-term investment strategy appears suitable for Filecoin. To execute this strategy, an entry price of $3.64, near the recent consolidation low, would be prudent. This allows for potential upside as the price moves towards the forecast and the resistance level. A stop loss at $3.57, slightly below the support price, would help mitigate risk in case of a sudden price reversal. The target price should be set at $3.85, aligning with the upper bound of the forecast and providing a reasonable profit margin. This long-term approach capitalizes on the bullish sentiment and allows for potential growth as Filecoin continues its upward trajectory. Based on the provided historical price data and the 1-week forecast for Theta network, a cautious short-term investment strategy appears to be the most suitable approach. The historical prices exhibit a fluctuating pattern with a slight upward bias, while the forecast suggests a potential decline in the coming week. Given this outlook, a short position could be considered, aiming to capitalize on the anticipated price drop. An entry price around $1.28, slightly above the current price and near the recent high, would allow for some room for price fluctuations before entering the short position. A stop loss should be set at $1.31, above the recent high and the current price, to minimize potential losses if the price unexpectedly surges. The target price could be set at $1.23, aligning with the lowest point predicted in the forecast, allowing for a modest profit if the price declines as anticipated. Based on the provided information for Dogwifhat, a short-term investment strategy appears most suitable. The 2-week price change shows a slight downward trend, and the forecast indicates a continued downward movement in the coming week. Although the price is currently near its support level of $2.44, the resistance level of $2.541 suggests limited potential for upward movement. Therefore, a short position is recommended to capitalize on the anticipated price decline. An entry price of $2.51, slightly above the current price, allows for a small buffer against unexpected price fluctuations, The stop loss should be set at $2.58, the first forecast price, to minimize potential losses if the price unexpectedly rises. The target price should be set at $2.44, the support level, aiming to secure profits before the price potentially rebounds. This strategy allows for a relatively quick entry and exit, maximizing potential returns within a short time frame. Based on the provided stellar price data, a medium-term investment strategy appears to be the most prudent approach. The historical prices show a slight upward trend, but the forecast suggests a period of consolidation before a potential further rise. The support price at $0.0904 indicates a floor for the price, while the resistance at $0.0973 suggests a ceiling for the immediate future. Therefore, a long position seems appropriate to capitalize on the potential for upward movement within this range. To execute this strategy, an entry price of $0.0945, near the current price and below the resistance, is recommended. A stop-loss order should be placed at $0.0904, the support level, to limit potential losses. The target price could be set at $0.0973, the resistance level, aiming to capture the full potential upside within the medium-term time frame. This strategy allows for a balanced approach, acknowledging the potential for both upward and downward movement, while aiming to capitalize on the likely consolidation and subsequent upward trend in Stellar's price. Based on the provided data for Starknet, a short-term investment strategy appears most suitable. The historical price data shows fluctuations within a relatively narrow range, with recent price action hovering around the support level of $0.3748. The forecast suggests a slight downward trend, with prices potentially dipping below the current levels. This indicates a potential opportunity to capitalize on a short-term price decline. Therefore, a short position is recommended for Starknet. An aggressive entry price could be around $0.405, aligning with the first forecast price. The stop loss should be set slightly above the entry price, at approximately $0.413, to limit potential losses. The target price could be around $0.392, aiming to capture a potential decline towards the support level. This strategy leverages the short-term bearish outlook indicated by the forecast and historical price action, aiming for a quick profit within a short time frame. Based on the provided PENDLE price data and forecast, a short-term investment strategy appears to be the most suitable approach. The historical prices show a general upward trend, but the recent price action indicates a potential consolidation or slight pullback. The forecast suggests a gradual increase in price, with the highest predicted price being slightly below the resistance level. This suggests that the market might be hesitant to break through the resistance in the short term. Considering these factors, a long position could be taken with an entry price around $4.75, aiming to capitalize on the potential upward movement. However, to mitigate risk, a stop-loss order should be placed at $4.65 to protect against a sudden price drop. The target price could be set at $5.00, aiming to capture a significant portion of the potential price increase before the market reaches the resistance level. This strategy allows for a balanced approach, taking advantage of the bullish sentiment while managing risk effectively. Based on the provided information for render, a cautious investment strategy leaning towards the short term appears most suitable. The 2-week price history reveals a fluctuating trend with a slight downward bias, while the forecast predicts a continued decline over the next week, reaching as low as $4.93. The support price at $4.751 suggests a potential floor for the asset. Considering this scenario, a short position could be initiated with an entry price around $5.24, aligning with the current price and the anticipated downward movement. The stop loss should be set at $5.42, slightly above the recent high, to limit potential losses if the price unexpectedly rebounds. The target price could be set at $4.93, aiming to capture the predicted low point of the forecast. This strategy prioritizes risk management while seeking to capitalize on the anticipated price decline in render. The The VeChain price data shows a slight upward trend over the past 2 weeks, with a recent peak around $0.0245, while the forecast suggests a slight dip in the coming week. It remains within a relatively narrow range, indicating a potential for consolidation rather than a significant downward movement. Considering the support price at $0.02197, a long-term investment perspective appears reasonable. Therefore, a long position in VeChain is recommended. The entry price should be set at $0.023, slightly below the current price, allowing for a margin of safety. The stop-loss order should be placed at $0.022, below the recent support level. To limit potential losses, the target price can be set at $0.0245, aiming to capture the potential upside towards the recent high. This strategy balances risk and reward, capitalizing on the potential for VeChain to continue its upward trend while mitigating potential downside risks. Binance Coin, as price history demonstrates a general upward trend, with recent fluctuations around the $590 mark. The forecast suggests a slight dip in the coming week, but with prices remaining above the support level of $541.3. This indicates a moderately bullish outlook in the short term. Given this context, a long position in Binance Coin seems appropriate. To execute this strategy, conservative entry price of $595 could be considered, allowing for a small buffer below the current price. The stop loss should be placed at $585 to limit potential losses if the price drops unexpectedly. Target price could be set at $606, aiming to capitalize on the potential for a price increase towards the resistance level. This strategy allows for a measured approach, taking advantage of the potential for upside while mitigating risk with a well-defined stop loss. Based on the provided data for Conflux, a cautious short-term investment strategy is recommended. The historical price data reveals a downward trend over the past 2 weeks, with the forecast indicating further declines. The current price sits close to the support level of $0.1448, suggesting potential for further downward movement. Therefore, a short position on Conflux is advisable. An entry price of $0.160, slightly above the current price, allows for a margin of safety. The stop loss should be set at $0.168 to limit potential losses if the price unexpectedly rises. The target price should be set at $0.145, aiming to capitalize on the anticipated decline towards the support level. This strategy allows for potential profit from the short-term bearish outlook while managing risk effectively. Based on the provided price information for Worldcoin, a cautious investment strategy would be suitable for the short to medium term. The recent 2-week price change shows a fluctuating trend with both upward and downward movements, while the forecast suggests a slight upward movement in the coming week. Price history reveals periods of significant volatility. Entering a long position at this juncture carries some risk due to the potential for further price corrections. Therefore, a more prudent approach would be to wait for a clearer upward trend or a pullback to a more attractive entry point near the support price of $1.85. This would allow for a better risk-reward ratio. A stop loss could be placed below the support price to limit potential losses, while the target price could be set at the resistance level of $2.464, aiming to capture a substantial portion of the potential upside. This strategy allows for a balanced approach, mitigating risk while still pursuing potential profits in the short to medium term. Based on the provided price data for Avalanche, a cautious medium-term investment strategy appears most suitable. The historical prices show a slight upward trend, but the recent price action has been consolidating near the support level of $25.78. The forecast suggests a slight dip in the coming week, with prices potentially falling to around $26. Considering these factors, a long position is recommended with an entry price around $26. This allows for a potential upside move towards the resistance level of $27 $7.41 while mitigating the risk of a further decline. The stop loss should be set at $25.78, just below the support level, to limit potential losses. The target price could be set at $27.41, aiming to capitalize on the full potential upside. This strategy balances risk and reward, allowing for potential gains while minimizing exposure to significant losses. Given the price trends and forecast for Jupiter, a long-term investment strategy appears to be the most suitable approach. The historical prices demonstrate a consistent upward trajectory, reaching a high of $1.06 in recent weeks. While the forecast suggests a slight pullback in the short term, it still indicates an overall positive trend with prices expected to reach $1.1 in the coming weeks. This suggests that Jupiter has the potential for further growth in the long term. Therefore, a long position is recommended for this investment strategy. An ideal entry price would be around $0.97, aligning with the current price and the forecast's anticipated pullback. A stop loss should be placed at $0.96, slightly below the support price of $1.0003, to minimize potential losses. The target price should be set at $1.1, capitalizing on the forecast's projected high. This long-term strategy allows for potential gains while managing risk effectively. Given the price trends and forecast for EOS, a cautious investment strategy would focus on a short-term approach, aiming to capitalize on potential price fluctuations. The historical price data shows a recent upward trend, but the forecast indicates a potential for consolidation or a slight decline in the coming week. The support price at $0.4567 provides a potential floor for the price, while the resistance at $0.4941 suggests an upper limit for the near term. Therefore, a short-term long position could be considered with an entry price around $0.476, aligning with the forecast and recent price action. A stop-loss order should be placed below the support price at $0.4567 to limit potential losses. The target price could be set at $0.4941, aiming to capture the potential upside movement towards the resistance level. This strategy allows for participation in the potential upward momentum, while managing risk through a defined stop-loss order. Based on the provided TRON price information, a cautious investment strategy with a medium-term perspective appears most suitable. The historical price data reveals a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $0.1587. The forecast suggests a modest upward movement in the coming week, reaching around $0.162. Considering this, a long position on TRON could be considered. An entry price of $0.159, slightly above the support level, would allow you to buy in at a relatively attractive price. A stop-loss order at $0.158, just below the support level, would protect your investment from significant losses. The target price could be set at $0.162, aligning with the forecast and offering a reasonable profit potential. This strategy capitalizes on the potential for a small price increase while minimizing risk through a well-defined stop-loss order. Based on the provided information for say, a short-term investment strategy appears most suitable. The historical price data shows some volatility, but generally indicates a sideways trend. The forecast suggests a slight upward movement in the coming week, but the price remains close to its support level. Given this context, a long position might be risky due to the potential for a pullback. Therefore, a short-term bearish strategy is recommended. An entry price of $0.45 aligns with the current price and the slight upward movement in the forecast. The stop loss should be set at $0.453, above the resistance level, to minimize potential losses from an unexpected price surge. The target price should be $0.43, below the support level, aiming to capitalize on a potential downward movement. This strategy allows for a limited downside risk, while targeting a modest gain based on the current market conditions and price forecasts. Given the provided price information for Shiba Inu, a cautious medium-term investment strategy appears most suitable. The historical price data shows some volatility, but the overall trend suggests a slight upward movement. The forecast, however, indicates a potential pullback in the coming week. This suggests that a long position might not be the most profitable approach at this time. Therefore, a medium-term strategy with a short position could be beneficial. An entry price around $0.000180, slightly above the current price, would allow you to capitalize on a potential downward movement. The stop loss should be set at $0.000186 to limit potential losses if the price unexpectedly rises. The target price could be set around $0.000175. Aiming to profit from a moderate decline in the price. This strategy allows you to take advantage of a potential short-term correction while remaining mindful of the underlying upward trend. Dogecoin shows a recent upward trend, with its historical prices steadily increasing over the past 2 weeks. Although the forecast suggests a slight consolidation around the current price level, it still indicates a positive outlook for the asset in the short term. Considering the current price action, support at $0.13773 and resistance at $0.14465, a long position appears to be the most suitable strategy. To implement this strategy, we can enter a long position at $0.14, which is slightly below the current price and near the resistance level. This allows us to buy at a potentially attractive price, while still capturing potential upside momentum. The stop loss should be placed at $0.13773, the support level, to limit potential losses. The target price can be set at $0.146, slightly above the forecast and resistance level, aiming to capitalize on the potential price increase. This strategy aims to leverage the short-term bullish momentum of Dogecoin while managing risk effectively. Given the historical price data and the provided forecast for Hooked Protocol, a cautious short-term investment strategy appears most suitable. While the historical prices show a volatile trend with both upward and downward movements, the forecast suggests a slight decline in the coming week. This suggests a potential opportunity to capitalize on a short-term price correction. Therefore, a short position is recommended, with an entry price around $0.44, a stop loss at $0.456, and a target price at $0.4294. This strategy aims to profit from a dip in price towards the support level, while minimizing potential losses by setting a stop loss above the entry price. The target price is set slightly above the support level, to ensure a reasonable profit margin. This approach acknowledges the inherent volatility of the cryptocurrency market, and prioritizes risk management while seeking to capitalize on short-term price fluctuations. Given the price trends and forecast for Aevo, a medium-term investment strategy would be appropriate to capitalize on the anticipated upward momentum. The historical prices show a general upward trend, with recent fluctuations around the $0.36 price level. The forecast indicates a continued upward movement, suggesting potential for gains in the coming weeks. The support price at $0.319 provides a safety net, while the resistance at $0.3968 suggests the ceiling for immediate price appreciation. Therefore, a long position is recommended to leverage this potential growth. An entry price of $0.355 would allow you to enter the market near the current price level, while providing a buffer below the recent support. A stop loss at $0.340 would protect your investment from sudden downward movements. A target price of $0.390 aims to capture a significant portion of the anticipated upward movement before reaching the resistance level. This strategy balances risk and reward, allowing you to participate in the potential growth of Aevo over the medium term. Given the provided price history and forecast for Coin, a medium-term investment strategy appears most suitable. The recent price history shows a slight upward trend, with a slight correction in the last few days. The forecast also suggests a continued upward movement, albeit at a slower pace. This indicates a potential for further price appreciation in the medium term. Therefore, a long position on NOT coin is recommended. An entry price of $0.0079 could be considered, aligning with the current price and near the recent high. The stop loss should be set at $0.00755, the recent low, to limit potential losses. The target price could be set at $0.00844, the recent resistance level, aiming to capture a substantial portion of the potential price increase. This strategy allows for a moderate risk-reward ratio and capitalizes on the anticipated upward momentum in NOT coin over the medium term. Given the price trends and forecast for Sun coin, a conservative investment strategy would focus on a medium-term approach to capitalize on the potential for a gradual price increase. The historical prices show a downward trend, with the current price hovering near the support level of $0.01156. The forecast suggests Sun coin could decline further in the short term. However, the historical price data also reveals periods of price recovery and consolidation. Therefore, a long position is advisable with an entry price of $0.0185, aligning with the current price and providing a buffer against potential short-term declines. The stop loss should be set at $0.0176, the lowest point in recent history, to minimize potential losses. The target price should be set at $0.0216, a previous high point, allowing for a reasonable profit margin while acknowledging the potential for further upside movement. This strategy aims to capitalize on a gradual recovery in price, while mitigating risk through a well-defined stop loss and a realistic target price. Given the price trends and forecast for PEEP, a short-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating pattern with a slight upward bias. The forecast suggests a continuation of this upward momentum, but with potential for consolidation. The current price is relatively close to the support level, indicating a potential buying opportunity. Therefore, a long position is recommended to capitalize on the anticipated price increase. An aggressive entry price could be around $0.000010, aligning with the forecast. The stop loss should be placed at $0.000098, the recent low in the historical price data, to minimize potential losses. The target price could be set at $0.000010, the resistance level, allowing for a reasonable profit margin before the price potentially faces resistance. Based on the provided ton coin price information, a short-term investment strategy appears to be the most suitable approach. The recent 2-week price history shows a fluctuating trend with no clear upward or downward momentum. The forecast price suggests a slight decline over the next week, aligning with historical price data. Given this outlook, a short position would be advisable to capitalize on the potential for further price drops. An entry price of $5.20 would allow you to enter the trade near the current market price, while the stop loss should be set at $5.25 to limit potential losses if the price unexpectedly rises. The target price could be set at $5.05, aiming to profit from the forecasted decline. This strategy leverages the short-term bearish outlook while managing risk through a well-defined stop-loss order. Remember, this is just a suggestion, and thorough research and careful consideration are essential before making any investment decisions. Given the price trends and forecast for Bitcoin Cash, a medium-term investment strategy is advisable. The historical prices show a fluctuating trend, with recent peaks around $370 and dips down to $347. While the forecast suggests a slight downward movement, it remains relatively stable within a narrow range. This indicates a potential consolidation phase before a possible breakout in either direction. Therefore, a long position is recommended to capitalize on the potential for a price rebound. An entry price around $357, slightly above the recent lows and near the support price of $340. $5.5 would be suitable. The stop loss should be placed at $345 to protect against significant downside risk. Target price could be set at $369, aiming to capture the potential upside movement towards the recent highs. This strategy allows for a balanced risk-reward profile, aiming to profit from a potential price increase while mitigating potential losses. Based on the provided data for Chainlink, a bullish investment strategy is recommended. The historical price data shows a steady upward trend, and the forecast predicts continued growth over the next week. The current price is hovering near the support price of $10.75, suggesting a potential buying opportunity. Therefore, an aggressive investment strategy for Chainlink involves taking a long position at the entry price of $10.80. The stop loss should be set at $10.70 to minimize potential losses, while the target price should be $11.40, aiming to capitalize on the projected upward movement. This strategy capitalizes on the positive price momentum and the support level, aiming for a profitable outcome within a short to medium term time frame. Based on the provided information for Polkadot, a short-term investment strategy appears to be the most prudent approach. The historical price data reveals a fluctuating trend, with recent highs and lows indicating potential volatility. The forecast suggests a slight downward trend over the next week, aligning with the recent price action. Therefore, a short position on Polkadot is recommended. An entry price near the current market price, around $4.33, would be suitable. To manage risk, a stop-loss order should be placed slightly above the recent high, around $4.44. The target price could be set around $4.024. The support level, aiming to capitalize on the potential downward movement. This strategy allows for a relatively quick entry and exit, capitalizing on short-term price fluctuations while mitigating potential losses with a well-defined stop-loss. Given the price trends and forecast for Near protocol, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend in the past 2 weeks, and the forecast indicates further declines. Although Near protocol has found support at $4.253, the resistance level of $4.99 is relatively high, suggesting limited upward potential in the near term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $4.76, aligning with the recent price action, would be suitable. The stop loss should be set at $4.85, above the entry price, to protect against unexpected price surges. The target price should be set at $4.55, below the support level, allowing you to take profits before the market potentially finds strong support. Based on the provided price information for stacks, a cautious yet potentially rewarding investment strategy emerges. The historical price data reveals a general upward trend, although recent fluctuations suggest some consolidation. The forecast predicts a slight decline over the next week, hovering around the $1.84 mark. This, coupled with the current price slightly above the support level of $1.831, indicates a potential short-term pullback. Therefore, a short-term investment strategy with a cautious approach is recommended. Entering a short position at $1.86, slightly above the current price, allows for capturing potential downward movement. The stop loss should be set at $1.88, providing a buffer against unexpected price surges. Target price could be set at $1.80, aiming to capitalize on the predicted decline, while leaving room for potential market fluctuations. This strategy prioritizes risk management and capitalizes on the anticipated short-term correction in stacks. Based on the provided data for Aptos, a long-term investment strategy appears to be the most suitable approach. The historical price data demonstrates a general upward trend, with the price hovering around the resistance level of $10.38. Forecast suggests continued price stability around $10, indicating a potential for gradual growth in the long term. Therefore, a long position is recommended, with an entry price of $9.98, aligning with the recent price action, and close to the support level of $9.34. The stop loss should be set at $9.35 to minimize potential losses, while the target price should be set at $10.50, allowing for a comfortable profit margin if the price reaches the resistance level and potentially surpasses it. Based on the provided data for Litecoin, a medium-term investment strategy appears most suitable. The historical price data shows a general upward trend with some fluctuations. The forecast suggests a continued upward movement, although with some consolidation around the $71 price level. The support price at $67.02 provides a safety net, while the resistance at $74.96 indicates a potential ceiling for the short term. Therefore, an investment strategy for Litecoin should involve a long position. A suitable entry price would be around $70, aligning with the current price and the anticipated consolidation. The stop loss should be set at $67.02, just below the support price, to minimize potential losses. The target price could be set at $74.00, aiming to capture a portion of the potential upward movement before encountering the resistance level. This medium-term approach allows for capturing potential gains while managing risk effectively. Based on the historical price and forecast for Uniswap, a short-term investment strategy focused on a long position appears promising. The historical price data shows a slight upward trend, and the forecast indicates continued growth over the next week. The support price of $7.325 acts as a safety net, while the resistance price of $8.017 suggests potential for further upward movement. This combination suggests a favorable environment for a short-term long position. To execute this strategy, we can consider an entry price around $7.85, slightly below the current price. This allows us to buy in at a potentially attractive price point. A stop loss at $7.65 would protect against significant downside risk, while a target price of $8.15 would aim to capture a reasonable profit if the forecast proves accurate. This strategy allows us to capitalize on the potential for price appreciation in Uniswap, while managing risk effectively. Bittensor. Price history shows a downward trend over the past 2 weeks, with the forecast predicting further declines. The current price is hovering near the support level of $548, indicating a potential for further downward movement. Given this bearish outlook, a short position on Bittensor appears to be the most suitable strategy. To implement this strategy, an entry price of $550 could be considered, allowing for a small margin above the current price. The stop loss should be set at $560, slightly above the entry price, to limit potential losses if the price unexpectedly rebounds. Target price could be set at $530. Taking advantage of the predicted decline and aiming to capture a reasonable profit, this strategy focuses on capitalizing on the short-term bearish momentum of Bittensor. Given the internet computer price history, 2-week price change, and 1-week forecast, a cautious investment strategy with a medium-term perspective appears most suitable. The historical prices demonstrate a fluctuating trend, with recent dips towards the support level of $7.972. The forecast suggests a continuation of this trend, with prices potentially reaching $7.92 in the short term, before potentially stabilizing around $8.08. Therefore, a long position is recommended with an entry price around $7.97, close to the support level. This allows for potential upside as the forecast predicts a rebound towards $8.08. The stop loss should be set at $7.92 to minimize potential losses. If the price falls further, the target price could be set at $8.35, aiming to capitalize on a potential break above the recent resistance level. This strategy balances risk and reward, allowing for potential profits while mitigating the downside risk associated with the current market sentiment. Given the price trends and forecast for Artificial Superintelligence Alliance, a conservative investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the forecast indicating further declines. The forecast suggests Artificial Superintelligence Alliance could drop from its current price, to as low as $1.28, while the support price sits at $1.065 and resistance at $1.407. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $1.40 would be ideal, aligning with the current price and near the resistance level. The stop loss should be set at $1.43, slightly above the current price, to protect against any unexpected price recovery. The target price should be set at $1.25, allowing you to take profits before the market hits major support at $1.065. Remember that short selling carries inherent risks, and it's crucial to manage your risk exposure effectively. Given the price trends and forecast for Optimism, a medium-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating pattern, with recent upward movements followed by minor corrections. The forecast suggests a continuation of this upward trend, with prices expected to reach $1.75 within the next week. This indicates a bullish outlook in the medium term. Therefore, a long position in Optimism is recommended. An ideal entry price would be around $1.72, aligning with the current price and providing a slight margin for price fluctuations. The stop loss should be set at $1.693, the identified support price, to minimize potential losses. Target price can be set at $1.814, the resistance price, aiming to capitalize on the anticipated upward movement. This strategy allows for potential profit while managing risk within a medium-term time frame. Based on the provided information for Ethereum Classic, a cautious investment strategy is recommended. The historical price data reveals a period of consolidation around $18, with recent fluctuations suggesting indecision in the market. The forecast price indicates a downward trend over the next week, reaching as low as $17. This suggests a potential for further price decline, making a short position more appealing. An entry price of $18.5, slightly above the current price, allows for a buffer against immediate price fluctuations. A stop loss at $19 serves to limit potential losses if the price unexpectedly rises. The target price should be set at $17, aligning with the forecasted low point, allowing for a potential profit if the downward trend materializes. This strategy emphasizes risk management and capital preservation, capitalizing on the potential for a short-term decline, while minimizing exposure to significant losses. The provided data for Ethereum name service suggests a sideways to slightly bullish trend in the near future. While the historical prices show some fluctuation, the forecast indicates a relatively stable price range around $17. Considering the support price at $16.1 and the resistance at $18.24, a conservative long-term investment strategy could be employed. We recommend entering a long position at the current market price, which is slightly below the forecast. Setting a stop-loss order at $16.1, the support level, would protect against significant downside risk. The target price could be set at $18.24, the resistance level, aiming to capitalize on any upward momentum. This strategy allows for a gradual accumulation of profits, as the price potentially moves towards the resistance level over a longer time horizon. Based on the provided information about Solana name service, a cautious investment strategy focusing on the short term would be most suitable. The historical price data reveals a fluctuating trend, but the forecast suggests a slight downward movement over the next week. Although the price is currently near the support level of $0.235, the resistance level of $0.2573 indicates limited upward potential. Given this, a short position appears to be the more prudent choice. To execute this strategy, an entry price of $0.248 could be considered, aligning with the current price and the downward forecast. The stop loss should be placed at $0.255 to protect against any unexpected upward price movement. The target price could be set at $0.238, allowing for a moderate profit potential while staying below the significant support level. This approach allows for a cautious entry into a potentially bearish market, while minimizing risk and maximizing potential returns within a short time frame. Based on the provided data for Aave, a medium-term investment strategy appears most suitable. The historical price data shows a fluctuating trend with a slight upward bias, while the forecast predicts a slight decrease in price over the next week. The support price is relatively close, indicating a potential for a rebound. Therefore, a long position in Aave is recommended. Prudent entry price would be around $153, aligning with the projected price at the beginning of the forecast period. To manage risk, a stop-loss order should be placed at $149, below the recent historical lows and the support price. Target price could be set at $162, representing a reasonable upside potential based on historical price movements and the resistance level. This strategy allows for potential profit from a price rebound while mitigating risk through a well-defined stop loss. Based on the provided injective data, a cautious investment strategy would involve a short-term perspective with a focus on a short position. The historical price data shows a recent peak around $22, followed by a downward trend. The forecast price also indicates a decline in the coming week, suggesting a continuation of this downward movement. Therefore, an entry price of $21 would be suitable, allowing for a potential profit as the price moves towards the forecast lows. A stop loss should be placed at $21.50 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $19.50, aiming to capitalize on the anticipated decline while staying conservative. This strategy prioritizes risk management and seeks to capitalize on the short-term bearish outlook for injective. Given the provided price data for Polygon, the 2-week price change shows a fluctuating pattern with a slight downward trend. The forecast indicates a continued decline over the next week, suggesting a bearish outlook in the short term. The historical prices hover around $0.36, $0.38, with no clear support or resistance levels identified. Considering these factors, a short-term investment strategy focusing on a short position appears to be the most suitable approach. An entry price of $0.372 aligns with the current price and the downward trend forecast. To manage risk, a stop loss could be placed at $0.376, slightly above the current price, to limit potential losses if the price unexpectedly surges. The target price could be set at $0.355, aligning with the lowest point in the recent price history and the forecasted decline. This strategy aims to capitalize on the anticipated price decrease while implementing risk management measures to protect against potential reversals.